Greece is a done deal, and Apple trades at $500 a share. Hello, fellow traders everywhere. Adam Hewison here, co-founder of Market Club, with your midday market update for Monday, the 13th of February. Yes, Greece is a done deal. They've all agreed on the terms there. It's all over except the shouting and the civil unrest, which will be coming. We're also going to be looking at Apple. It traded at $500 a share, an amazing event even at the Steve Jobs' passing. We're also looking at three stocks on the move today: Priceline.com, GRAINGER, and Advanced Micro Devices. Let's see how those markets are trading right now. Remember, trading tip number one, don't fight the market, move with the market. Now let's analyze the charts using Market Club's Trade Triangle technology. So we're on my home page. We're a little bit late today. We had some challenges here, one of which was a major power failure in our area. Even our challenge was to keep the power on, and we had a generator going, so things are good. We're up to date and running. So here we are, the Dow plus 85, strong trend. Nasdaq and S&P 500 plus 100, very strong trends. If we see this market close over the 1351 level today on the S&P 500, I would view that as a very, very positive action. And I think that's a good chance it will happen. So let's see. A lot of people are fighting this market on the way up. It is a bull market, folks. And you can look at point your fingers at all the things, all the unrest, all the problems around the world, but the market is going higher. And the bottom line is, don't fight the market, trade with the market, and move with the market. So bullish on this event. Let's go to our next market that we're looking at, and that's going to be the Nasdaq. Nasdaq is also acting well. It's definitely on the plus. This is a daily charts we're using, and it's a 3-month view we're taking back, but this market still looks good to us on the upside. Definitely the trend is up there. You can see it above the parabolic and also at the top range of the Donchian trading channel. So next market we're looking at is the silver. Silver, as you know, we've been a little bit negative on this market, and as you can see, it has really just gone sort of sideways. Key level is let me just put my telestrator on here and see if we get this, move that up here, and see if we can get this showing what we want to show. And basically, we're looking at a really literally a line in the sand, and that line in the sand is going to go right here, 33. If we see the market go through there anytime, that's definitely a rollover, very similar to what we saw here. And that's how it seems to be the way silver is trading this time. So watch that 33 level. That's the line in the sand. 34.50 is the upside, but 33 is the line in the sand on the downside. Watch that very carefully. A lot of traders are watching that really super carefully. So let's go to our next market. That's going to be gold. The gold market is actually the same way. We've got a plus 55 reading, which is a trading range. As you well know, the monthly is down, the daily is down. Only the weekly remains on the positive side, and that's beginning to wane also. You can see the parabolic is above the market right now, and today's action is not positive so far. Generally speaking, this market looks as though it's rolling over it a little bit, and we could see this market go considerably lower. We've got some counts that would surprise people. If the stock market does what we think it's going to do, and we've got some other things going on, I think that this market is going to be very, very hard-pressed to push up. The Greece problem, which was pushing and propelling this market, is for the most part done. There'll be other problems, of course, but no one seems to be really that gung-ho on buying gold right now. So let's go to our next market we're looking at, and we're going to be looking at the copper market. Now, the copper tends to reflect economic conditions. We're 55, but that's more a leaning to the upside. We just went down below the parabolic today, but generally speaking, this market is still in an upward trend longer term. Our monthly came in at 3.75. We're currently trading at 3.84. The market should find good support around the 3.80, which is right here, these previous lows. I don't think we'll be going below that level. So let's see how that plays out. Generally speaking, we like the way this market looks longer term. So let's go to our next market. That's going to be the crude oil. This is the one to watch, in my opinion. This market's beginning to do something really extraordinary. Let's just pull this out a little further. And you can see we painted this picture before, and we'll paint it again today because it's so important in my mind. And hopefully you'll see it also. But this whole area, there's two ways to look at this area. Is either this is a huge energy field to the upside, or it's a huge distribution field to the downside. It's still early to tell, but the clues are, in my mind, this. Our monthly trade triangle, which has been very, very accurate on the crude oil market, is still positive. Okay, so that's a plus. So that's one plus. You've got the trade score 75. That's another plus. You've got the daily is a minor plus, but certainly a plus. Only the weekly is the only negative that we see right now, and that, I think, is going to give way to this market going higher, because it generally looks to me as though we've got a potential for this market to, we think this is a cyclic low, by the way, right here. The key line in the sand, again, there's always lines in the sand in my mind, so you want to watch this area very carefully. And the area I'm going to point out to you right now is the 102 area, which is right here. That's the first line in the sand, and the next one comes in at 104. So 104 and 102, they're the two areas to really, really pay close attention to. We're currently trading at 100.50. This is the April contract that we're tracking right now. I think if we see the 102 level broken, you definitely want to be long. I have just to say this, I'm going to be buying this market aggressively if it moves over these levels. And if we move over these levels, we're looking at substantially higher prices for crude oil, potentially up to the 125 area. So I would really want to pay close attention, because this could be a really nice, fast trade to make some money. So let's see how that plays out. Let's just clear the screen again and go to our next market. Definitely want to keep close eyes. You can trade the USO, or you can trade the futures or options. This is the crude oil, the April contract, electronic contract, but you can see it's beginning to look like it wants to push higher, particularly if we see the close. The high today so far has been 100.95. If we close over 101, that'll be a new high close in quite some time. One of the things you can do with MarketClub, which I really enjoy, and you would enjoy it too, is just do a close-only chart. Boom. And as you can see, if we take that off, and let's take some of the other studies off, which we can do very simply, just on a simple line chart. Let me take these off as well. We showed you this last week, which was, I think, the first clue, was the break of the trend line right here, broke the momentum on the upside. Certainly, you can see the last high close we had was right around here, around the 111 area. We're currently trading at 100.55. If we close up here, it'll be a new high close, higher than the previous close that we had here, which is also 100.17. So if we close here, this would be a very, very good sign, and it would indicate that we're going to see this market move higher. So let's see how that plays out. Let's go to our next market, and that's going to be the euro-dollar. The euro-dollar has been, it's still kind of mixed, and I'll put our trade triangles in. You can see our monthly trade triangles still in a negative mode. Only the weekly and daily are short-term, or intermediate term are positive, indicating a trading range. And you can see from the action here, it's pretty much a trading range without any kind of strong, put the candlestick charts back on. But you can see we traded as high, I think, at 32.75, 33.19, and the lows there, again, about the 130 level. 130.20 is a key level. That's the line in the sand again. So I think we maybe chop around here for a while as we get acclimatized to new levels. So again, let's see how that plays out. We're also looking at the dollar index, which we look at every day, of course. And the dollar index is, we mentioned this last week, is beginning to, there's the positive divergence right here. Remember, we said the markets was making new lows, new low right here, but the divergences, the momentum did not follow through, indicating a divergence in a possible recovery from here. This is also a Fibonacci 50% retracement from, let me just take this up, from the highs that were here to the lows that were down here. It's very approximate. I'll show you how to do that right now. You just click on the very high point, drag it down to the lows, and that gives you this 50% retracement. So that's a natural pullback in a bull market. So let's see how that plays out. But lots of opportunity, lots of targets, target-rich opportunities, as you say. And this is the CRB, Reuters Jefferies Commodity Index. And as you can see, it's been going sideways without much action either way. Generally speaking, our long-term monthly trade triangle is from 335.10 is short. We're currently trading at 313, but there's really no direction here. Again, the places you want to watch for, you don't want to play in the middle. That's a fool's game. You want to play on the top end and the bottom end. And here they are. The top end, you've got the, let me just take the Fibonacci number off. You've got the 320 level here on the top end, right here, which is if you need break over this level, then we're going to go much, much higher. And on the downside, you've got this around the 310 level, a little bit lower than 310. You're looking at 309 approximately. Go through 309, then you're going to see this market come down and test these lows here. But you've got this low here, this low here. The question is, are we going to print another low right around here? We'll see. Make it a triple bottom in this effect like this. Well, we just have to see how that plays out. But generally speaking, if the crude oil goes up, this could be a big change in this contract with inflation, of course. So let's clear the screen again, go to our next market. And it's going to be back on Monday. I hope you all had a great weekend. And let's go to our next market, and that's the Apple. Apple traded at $500 a share. My guess is I think we may have done it for the upside in Apple. I hate to say that because I love Apple, but you can see with our trade triangles, look at these, just massive profits. Monthly from $355. It's a $150 profit almost in this. $393 on the weekly, $428 on the daily. Everything is positive. This market's had a remarkable move up, and there's no reason why it can't go higher. You're in fact, if you go maximum on this, you can see the monthly kicked in right here, and the monthly kicked in right here. So 103 was the first monthly buy we had on this Apple, followed by another monthly buy at 355. Just doing great. Now the question is, how high can this go? Well, it's hard to tell. It's really difficult to tell. You're trading a lot of emotion. They make a great product. I love their products. A lot of people love their products also, but the question is how high can it go? I think 500, usually big numbers tend to be the thing that stopped the market. You can see 200 was the big number that stopped it here, and I think that's definitely 400 kind of stopped it here, but big numbers round numbers tend to stop markets. So let's see how that plays out. We're currently right around the $500 range right now. We may trade a little higher, but I think depending on how we close today, it could be a lot of realized profits. People taking some profits off the table in this juggernaut. So let's go to our next market. This is Priceline, the big mover today. We pick our big movers based on just the big movers, and you can see we had a signal there at 553.33. It's trading at 569 right now. That's the monthly trade trial that kicked in. And let's just close this up a little bit closer. So it just kicked in today, and you can see how it just 553, the market I think opened at 549, so you would have had a chance to buy it at this level. And it looks like it wants to go higher. Let me just give a little more room to this, because this is what we're looking at. You've got these highs that are really the problem with this stock is even more expensive than Apple, so in terms of buying a share. But let's just take a look at this. Where we're seeing this line in the sand, so to speak, is right here. So I'm just going to freehand this. You can see we've had really a big breakout here. And if you measure from the lows, let's say around here, this level right here, just to be conservative, we're looking somewhere around I'm just going to round that off to the 550 area, to the 450 to the 550 area. So I would be looking for this market. The target zone will be $650 a share on Priceline, which is going to make William Shatner, I guess, very happy. So again, 650 is our target zone in there. There's a major breakout today on the upside. Our trade triangles, of course, you see the date 2/13, and it's on the way up. So let's go to our next market, and that's going to be next market we're looking at is also doing very, very well. You can see our monthly kicked in here at 161. This is the WW Grainger, and we're currently trading at 207. Now, again, this is back in September of last year at 161.21. It's our first buy signal. You can see I had another weekly buy signal at 162, and you can put the weeklies in here, and you can see that occurred back here on 10/18, which is really October 18th. And it's never changed. So it's a great trend, great markets, and great trends, and it's the way to make money. Again, staying with the trend, don't fight the market, move with the market, and this is what the trade triangles do for you. And again, this is a big move today. We're up 3.64%. We just pick these stocks based on the big movements of the day and see where we are with our trade triangles. It's pretty simple, and I think you'll enjoy doing that. If you're not already a MarketClub member, give it a shot. You'll enjoy it. So let's go to our next market. This is First Solar. Now, this is First Solar. Remember, we talked about First Solar before last week. and it's the, let me just get this, take this off. And you can see on the monthly we've been negative, and this is another big move today. However, the weekly is neutral, so we're sort of neutral on this market, but we would have avoided, go in closer, we would have avoided the last couple of days. We're down today over 5%. We would not have been long this market because remember, we only trade on the direction of the trend. The major trend is down, and we don't have a weekly signal to confirm that yet, a weekly trade triangle. Once we get that, then we'll be off to the races. So that's today's markets, and I appreciate you spending time with us today. Remember, lots of opportunities. It's a target-rich environment. We are in a bull market, and we are going to go higher. Don't fight the market, folks. Move with the market. This is Adam Hewison for Market Club. I'll see you tomorrow right here, same time, same station. Have a great trading day.